And so many people will just sign that 5-year offer and send it back. Right now, Canadians are in such a, I find, like they get a renewal offer for their mortgage and they almost feel like, oh my God, I'm so lucky I got a renewal, because mortgages and interest rates have been such a talk for the last couple of years, right? So they're getting these renewals and they're like they almost feel like, oh my God, I'm worthy of a mortgage renewal. I should sign this and send it back. And they're flipping into these 5-year fixed terms where honestly, at this point with rates, I don't know if 5-year, or I personally don't think 5 years is the option to go with.
You know who made it.
Welcome back to the Wealth Easy Show, where we talk all things wealth, health, and real estate. Today, our guest is Samantha Power. She is a 10-year mortgage professional who's known for her social media presence. And today, we're going to discuss the current mortgage environment along with where she sees the interest rates going. Welcome to the show.
Thanks for having me.
Give us listeners 2-minute bio on yourself.
Oh, goodness. I'm a mom. I'll start off by saying that. I have 3 kids, an almost teenager, which is terrifying, and then 10-year-old twins. I got into the mortgage industry just about 10 years ago. So I was licensed in 2015. Didn't have an idea of what I was doing back then and got into it and never looked back. Like I said, busy mom of 3. So when I'm not helping with mortgages, I am often at the hockey arena or tumbling gym with my kids, and that's about it.
Well, I even see you working on the soccer field.
Yeah.
I saw
God.
your Instagram yesterday.
Yeah, nothing like thrown at me last minute. Hey, Mom, I got a soccer tournament tomorrow. I'm like, pardon? Yeah. So life is pretty much kids and mortgages.
But that just also shows your dedication too for your clients. I mean, a lot of people say, "Oh, I'm going to put that off. I'm going to put that off," but you're there on the soccer field with your laptop working.
I sure was. I actually had to reschedule a few phone calls yesterday because who would have thought that school teams, the parents were just offside with their screaming. Like, my kids are in competitive sports, and it's not nearly as loud as it was yesterday during a school soccer tournament. So, yeah, I was trying to get as much as I could done. But, yep, on the soccer field, in the hockey arena, tumbling gyms, my office, wherever.
It's the same. I was in Miami for 10 days. I was there for a conference, but we spent another few days, and I'm sitting by the pool, and I've got files that need my attention, and I'm on the phone, and I'm saying, "Honey, I'll be right back. I've got to run to the room. I've got to upload some documents, or I got to do this, or I got to do that." It's like you're constantly working on it. And I let my clients know, by the way, I'm on vacation, and this is what I'm going the extra mile I do for you.
Right. There's been many times where I've said to myself, "Okay, I'm going to go on vacation and I'm going to completely disconnect." And it never happens. It never happens. And, having a partner that doesn't have this type of career who can fully disconnect from his career while he's on vacation, oh boy, what a different life that would be.
Yeah, there's half the time, I think, for half the vacation, I told my wife, "You go get us chairs at the beach, or you go get us chairs at the pool, and I will try to be down in an hour and a half." And sometimes, it's 10 o'clock. She's down there. She's messaging me, "Are you coming?" I'm like, "Not even close. I'll see you at lunchtime."
And she's side-eyeing you while you can't see her.
Probably. But listen, she understands.
Right.
If you want this lifestyle, there's certain things that I got to do, and I can't put my clients off. Unfortunately, I can't travel without my computer because my clients need me. And just like our clients need us. Yeah. Because there's always something that can go sideways.
And anytime you're on vacation, something always goes sideways.
Always.
You feel like you're not busy? Book a vacation. I guarantee you will be as busy as you could ever be.
Yeah. What drew you into the mortgage business?
So previous to mortgages, I actually did collections. And I loved it.
Okay.
I loved it.
You can tell us about that.
I worked for a credit card collection company, and I have a bit of a spicy personality. So collecting was actually rather fun for me. The only reason that I got out of it is because it was long hours, right? So if we collected across Canada, we were in different time zones. And I had, at that time, just one child at home who was a baby. So working that, later nights didn't really go well with the mom side of it. So one of my best friends is actually a mortgage broker. And she said, why don't you get into mortgages? And I was like, are you crazy? I hate math. All through school, I hated it. So I ended up taking the course, and I did it in person. And I believe back then, I don't know if it's still the same, but I think you have like 4 or 6 months after you write the course to do your exam. And I remember leaving the course and being like, I hate this. Like, I have no idea what's going on. This is math. I hate it. I went home. I put my book like on top of my fridge and never looked at it again. And my exam, I was going to expire, not be able to write the exam. And my mom was like, are you going to go do it? I'm like, no. She was like, just go write the exam. And I was like, ugh. So I went and wrote the exam. I didn't study. I didn't look at the book again. And it's a long exam. And I was done really quick to the point where the teacher was like, you should sit down and review that. I'm like, listen here. I've reviewed this about 3 times. I'm done. He's like, I'm going to mark it right here. And I'm like, yeah, go ahead. Thinking like I totally failed. And he's like, here you go, you passed. I'm like, oh, should have been excited. I passed, I joined a brokerage, and here I am.
But not just here you are. You've actually done exceptionally well. You've won several awards.
I have.
Tell us about these awards that you've
So I've built my business on my own. Realistically, when I started in the business, I joined with a small boutique brokerage where there wasn't really a mentorship. Like I see now what brokerages are providing, and I'm like, where would I be today if I had had that 10 years ago? I've built it on my own, which I'm actually really, really proud of. I have turned social media into an income stream for me. Mm-hmm. About, I would say now, 95% of my business now comes from social media. In a downturned year last year, I increased my volume in business 10 million, which was kind of unheard of across the board for agents, right? All thanks to social media. So I put in a lot of time, a lot of work, and it's paying off. But it requires me to continue to put in time and work to continue growing.
Well, that's just the thing with the social media. Like if you can't just do one video, right. You're constantly doing you're either posting every day, and I see you're very active. You won several awards. You've won for Rock Capital, our brokerage firm. You've won for
Mortgage Center Canada gave me the award for social media. Yeah, it is social media in itself is a full-time job.
Yeah,
like mortgages is a full-time job, and then social media is another full-time job. So, going back to like the partner part of it, I'm on social media a lot where he is looking at me like, oh my God, what are you doing? And I'm like, this is how my business comes in. Mm-hmm. Social media is a very important part. I believe in anybody now who's self-employed. It doesn't matter what industry you're in. I think you should be on social media.
Well, you want to be an authority too.
Right.
I think people who are constantly seeing your stuff look at you as an authority, and they're going to feel more comfortable. I've picked up several clients in my financial planning space that saw my videos, heard the advice I was giving, right. was not in line with the banks, and thought, there's something different. Let me investigate. And they came and they sat with me and said, we don't like the advice that the banks are giving us. We don't trust them. We like what you're talking about. We want to work with you. And it's been a fantastic relationship. And I've basically put them on a plan and protected all of their assets and gotten to doing a bunch of real estate stuff with them.
Right.
So it definitely helps. And people look at you as an authority that you do know what you're talking about.
Right. It goes back to, I even think when I was a child, looking at my parents who have done quite well for themselves, growing up, if they needed money, they went to the bank. If they had to put money somewhere, they went to the bank. Back then, money... When you thought of money, you thought of your bank, and you thought of your bank as the only real option, right? Things have totally changed, and social media has brought out that ability to teach Canadians. There's more options than just your bank. And when the banks knew they were really the only option, they used it to their advantage, right?
Oh, yeah. Just take a look at their revenues.
Exactly.
And their profits.
Hey everyone, it's John. I just wanted to thank you for being here, and I would ask that you please subscribe to the show by just clicking the subscribe button right here. I'd really appreciate it. It helps grow the show so we can get even more successful guests on the program to help you. If you're already subscribed, a huge thank you. When you subscribe, you're going to get access to the program before anybody else does. So if you would, just click subscribe right here. Thanks so much, and welcome back to the Wealth Easy Show.
Many families are looking to improve their cash flow through mortgage refinancing and renewals. What advice do you have for homeowners considering these options, and how do you help them navigate that process?
So my biggest part of my business is refinances and equity takeouts for debt consolidation. Now more than ever, Canadians are struggling cash flow wise. I'm doing a lot of second mortgages right now for Canadians because their first mortgages aren't up for renewal yet, and they're still hanging on to those real sweet 2% interest rates maybe for another year, but they've racked up debt and they need some cash flow. So second mortgages seem to be the popular thing right now, where we're lining them up to their renewal date with their first mortgages, clearing some high interest debt, which is in turn helping their credit scores, getting them back on track financially with their cash flow. And then in a year or a year and a half, some even 2 years out, being able to consolidate back into one normal mortgage and hopefully be on track still in the next year, 2 years. But cash flow is a huge thing right now with Canadians. And one of my biggest pieces of advice when it comes to your mortgage, interest rates seem to be all the rage with Canadians. They love to focus strictly on interest rates when it comes to their mortgages. And although it is a piece of your mortgage that you should be focused on, it is not the only thing you should be focused on. Now more than ever, focus on that payment. Does that payment fit your lifestyle? Does that payment fit comfortably right now in your budget?
And also product too, because, a lot of people are just strictly focusing, like you said, on that rate, that number. But if you are thinking that you may not be in this house 5 years from now, why are you locking yourself into a 5-year fixed? And
I'm noticing that a lot with the bank offers right now on renewals. A lot of them are coming across with just 5-year offers. And so many people will just sign that 5-year offer and send it back. Right now, Canadians are in such a, I find, like they get a renewal offer for their mortgage and they almost feel like, oh my God, I'm so lucky I got a renewal, because mortgages and interest rates have been such a talk for the last couple of years, right? So they're getting these renewals and they're like they almost feel like, oh my God, I'm worthy of a mortgage renewal. I should sign this and send it back. And they're flipping into these 5-year fixed terms where, honestly, at this point with rates, I don't know if 5-year, or I personally don't think 5 years is the option to go with. And I'll be completely honest, I can't wait till 5-year terms are the norm again, because they give me the best paycheck and I haven't been giving them out at all. So
what are you advising your clients? Interest rates is such a buzzword right now.
It is.
Especially with the announcement coming tomorrow.
Tomorrow, yeah.
I think there's about a 35% chance that they're going to drop it by 25.
Yeah.
I don't know.
I will be surprised. I'll be happy. I think it's going to hurt our dollar, but if we see a drop, great. Personally, I don't see it happening. I see a maintain. When it comes to rates with clients, right now you say the word variable or adjustable rate with clients, and some clients are like, Sam, are you crazy? Why on earth would I take that? And that's fine. Not everybody is going to be a variable or adjustable rate client. If you're going fixed, the sweet spot right now seems to be a 3-year.
Exactly.
Your 1 and your 2-year rates, if you're going to lock into a 1 or a 2, I'm leaning towards the variable or the adjustable rate mortgages. 3 years seems to be a sweet spot. Personally, I wouldn't lock in anything longer than that.
And it's funny that you mentioned that, because it's exactly what I've been doing. And again, we get paid very nicely on a 5-year fix.
100%.
We're not getting paid nicely, but it's not about us. It's about what is the client wanting, and what's in the best interest of the client. And exactly what you said, I wouldn't go longer than 3 years. People are asking, should I go variable? I'm like, you know what? I don't have a crystal ball. Will interest rates come down? They're only talking 75 beeps by March 2025. That puts us down at just under 6.5.
Right.
Okay. So if I put you into a 3-year fix, you're looking at like 5.89.
Even a little bit less than that now.
Right?
Yeah.
So you pay that, and also too, and I'm also looking at the stress test.
Right.
So I've got to qualify you at 200 basis points above the lowest contract rate. So I can qualify you at 789.
Right.
If I put you into a variable, what are you getting? Like minus 40 maybe?
Right.
Now I got to qualify you at 8.8. That may not work for you.
Right. Yeah. I've got, your clients that are variable and adjustable, and they've been variable and adjustable their entire mortgage life. And they They know how it works. They've gone through the ups, they've gone through the downs of it, and they'll always be your variable adjustable rate clients. I've got the clients that went the variable adjustable rate option, and then now they're like, not a chance in hell am I going back to that. It's not a bad option. Variable adjustable is never, I personally don't think it's a bad option. It's just simply not for everybody.
Why would you recommend someone to be in a variable right now?
Right now, one, looking at your goals. Are you in this house long term? Right? Your variable versus your fixed penalty calculations. Big difference. Actually, funny enough, before I came here, I had a call with a client that is with one of the big banks, and they were told they need to refinance their mortgage to get one of the applicants off the mortgage. So we're looking into a few different options. But when I found out the interest rate they were given 8 months ago, and they were told they need to break this, I said, I need you to find out what that penalty is going to be. It is going to be hefty. And the client was like, what are you talking about? I said, you're in for an interest rate differential calculation because over the last 8 months, those fixed rate terms and rates have dropped, which means a standard penalty calculation on your mortgage is the greater of generally 3 months interest or an interest rate differential calculation on those fixed rates. And those interest rate differential calculations is where those penalties become hefty.
Yeah.
So, I mean, looking at what variable is sitting at today, variable 3-month interest penalties have been a little bit hefty the last little bit, but that variable rate option, the 3-month interest penalty, is always a winner for me, especially if you're not in that house long term.
Exactly.
Or the goal isn't to be there long term, right? So that's my number one. If you're okay with the fluctuations in income, what's your risk tolerance? What's your comfort level? That kind of thing. That's where, clients tend to go that option.
Well, I don't see rates going up.
Right. God hope not.
I don't see the rates going up. All the economic data coming out is suggesting that there's going to be a cut. I doubt there's going to be a cut tomorrow.
I agree.
I definitely think there's going to be one come July. Probably another one in September. And I don't know if we're going to get anything else by the end of the year. Probably not till springtime. And again, it all goes back to the economic data.
Correct.
What's the job growth like? What's the housing status like? But I think if they start to decrease at least the prime, maybe once or twice, I think it's going to actually spur people to get back out there and buy homes.
We're already seeing that. We're already seeing with speculation of rates coming down, buyers are coming out of the woodwork.
Yeah.
Right? Rates are coming down. We're being told rates are coming down. There's anticipation of rates coming down, and we're seeing the buyers creep out. Once that first rate drop comes, I hate to say it, but we're in for another crazy housing market, in my opinion.
Well, it goes back to FOMO, right? The fear of missing out. And right now, it is a total buyer's market. You see one drop, 2 drops, there's going to be an influx of people. We're going to get back into multiple offers.
Some areas we're already seeing that, right? I had clients the other day. They had 12 registered offers they were going in against.
Wow.
The real estate agent called me. He's like, do they stand a chance? I said, no. Why? Why are we putting them up against 12 registered offers?
Mm-hmm.
What's coming after they register number 13, right? That first rate drop, I think we're going to start seeing that a lot more. And that just goes back to supply versus demand in this country. We do not have the supply for the demand that we have.
Well, not for the amount of immigration that's coming in.
No. And they're not expecting the supply to be built up enough until at least the year 2050, which is, we're in 2024.
And, the housing starts are just so slow to get anything approved. It's a major problem. There's too much red tape right now within the municipalities.
Not to mention the cost of just building in general.
Oh, builders would rather just sit on land right now.
Yep.
Right? You've built such an extensive network of lender partnerships, including big banks, credit unions, monoline lenders, and private lenders. How do you leverage these relationships to secure the best possible financing solutions for your clients?
That's a good question. I mean, I'm pretty close. Am I close with all of my lenders? No, absolutely not. All mortgages are not one size fits all, right? And people often ask me, like, who's your top lender? You would ask me that 5 years ago, I would have had a top lender. Today, every single mortgage seems to require something different. Mm-hmm. So I'm sending business all over the place because it all comes down to the client's needs and where they're sitting right now. Staying in touch with my lenders, attending their networking events and their industry events that they put on, I find is incredibly important. It gets me out there. It gets me in front of my lenders, my underwriters, gives me that personal edge with them. And then, sending in business that I know fits their lending space. I'm not going to send somebody with horrible credit and no income to one of my prime lenders. They're not fitting there. And at that, sending something there is just going to give my underwriter there, like, Samantha has no idea what she's talking about. So really knowing my clients' needs, their wants, and then knowing my lenders' criterias and their lending guidelines and what they want and what they don't want. I'm not going to send them stuff they don't want because that just looks bad on me. So knowing where their lending guidelines are and being face-to-face with them, I find is incredibly important.
And that just goes back to dealing with a mortgage broker like yourself, because when someone walks into the bank, what are they getting?
Right.
They're getting one lender, one product. It's one size fits all.
That's it.
You just said it's not a one size fit all industry.
Not at all.
Right? So dealing with a broker, you have access to 35,
Lots.
40 lenders,
Yeah.
anywhere from A's, B's, privates, credit
Right.
unions.
Yeah, I like to say, when you work with your bank, and don't get me wrong, there is sometimes where I will tell a client to stay with their bank because that is their best option at that time. But I like to reference it as going to your bank is like going into Burger King. And the reason I use Burger King is because I can't stand Burger King. You walk into Burger King and you have Burger King options only. You can only select from Burger King menu. Going to a broker is like going to the Mandarin or a buffet.
Yeah.
You've got so many different options. You don't fit here, that's fine. You might fit here or here or here or here or many different lenders that we have, right? So sticking with your bank, and like I said, don't get me wrong, there is sometimes where the bank is your best option. Your broker has options. Your bank has their options and their options only.
That's a great analogy. Now you made me hungry. Going in, thinking Mandarin. When's the last time I was at
Right?
the Mandarin? It's like, well, I can go to their sushi section. I can go to their grilled
Yeah.
section. I could go to my favorite spot is the dessert section.
Right?
But you're right. You have
Options.
choice. They cater to every person's taste.
Yeah, there's options.
Right.
You walk into the bank, you have the bank options.
That's it.
That's it.
That's it.
If you don't fit within their lending guidelines, see you later.
You got nothing to
That's
compare
it.
to.
Bye.
Exactly.
Right?
Yeah. So you work with a diverse clientele. So
do.
from first-time home buyers to seasoned investors, how do you tailor your approach to meet the unique needs of your clients?
So I'll be completely honest. Social media has really put out my personality. When I go onto social media, who you see on social media is who you're getting on the other end of the phone call. When you call, people say to me, like, they'll call and be like, I feel like I already know you because I am that person. So people are calling me because they feel like they know me through simply social media. I don't tend to get clients that don't really fit well with me because the ones that don't like me on social media aren't picking up the phone to call me,
True.
right? They're seeing me on the screen and saying, you know what? I relate to this person. She's relatable. I feel like I could vibe with her versus, do I get a ton of, doctors or physicians or millionaire clients coming to me? No, I don't. Because I don't put out that, let's talk about your billions and billions and billions of dollars. Right now I'm relating with the average Canadian. The ones who are struggling financially because of, well, look where we live,
Yeah.
right? I'm relating to a lot of families, people with kids, in competitive sports, putting food on their table, high interest debt, letting them know that this is normal. You feel like you're drowning? People call me all the time. I'm so embarrassed. Why? This is normal. So my approach doesn't really differ from client to client. I feel like what you see is what you get, and they expect that when they call me.
What are some of the most common challenges self-employed individuals face when trying to secure a mortgage, and how do you help them overcome these hurdles? Because I know in my practice, self-employed people are difficult.
Self-employed, and we're self-employed, right?
Yeah.
So one of my opening lines with people who say I'm self-employed, hey, me too.
Yeah.
Right there gives them like, oh, you're not an employee at a bank who's, maybe getting a salary, right? I'm self-employed as well. The one thing I can say to self-employed individuals is, listen, if you are going to write your taxes down to where you are showing next to no income, great. Do not expect the best interest rate. You want the best of the best? start paying the tax man. You can get a mortgage. Actually, and I say this quite often, is a self-employed individual actually has more options than somebody who is simply just employed when it comes to a mortgage. And when people hear that, they're shocked. What do you mean? I walk into the bank and the bank looks at me like I'm a criminal because I'm self-employed. Not with a broker. There's so many different options when it comes to being self-employed and the types of mortgages you can obtain. Could they cost you slightly more? Yes, but you want to do the math on what you're going to pay the tax man versus what you're going to pay in interest on a mortgage and a slightly higher rate. Majority of my clients that are self-employed end up staying on the alternative side of lending from that number. I say, this is what you're going to have to show on your taxes for the next 2 years to get on the prime side for this interest rate. Take that to your accountant and ask how much you're going to pay CRA. They come running back.
Yeah.
Put me on the alternative side.
Yeah.
And once I break it down like that, they're like, oh my God. One, you didn't just kick me to the curb because I'm self-employed like my bank did. But two, wow, you kind of made this really easy to understand. So my biggest piece of advice to self-employed people is you actually have more options than what you think you do. But you want the best of the best rates, open up your wallets because CRA is going to take a pretty penny.
Exactly. And you know what? I say this to my clients all the time. Let's take a look at what the taxes would be.
Yep.
If you want to defer purchasing a home for 2 years, because banks always want the 2-year average.
Yeah.
So you could either defer purchasing the home. Now you're also deferring what the value of that home is going to go up. If you assume, say, a 4 or 5%
Right.
rate, right? How much more money are you now going to have to put down just to be able to purchase a home with an A lender
Correct.
versus using self-employed? How do you qualify self-employed people? What are banks looking for and lenders looking for on the B side, the alternative side?
The alternative side depends on what option, but generally we don't ask for taxes. Like there's times where I don't even want to see your T1 generals. I can use bank statements.
Yeah.
6 months, 12 months bank statements. Now, more common is 12 months bank statements, but we're able to add up all of your deposits and use that as income.
And take out some
Take out some of your expenses.
Yeah.
Yeah, but you look at some people who are self-employed, you look at their 12 months business bank statements, they're putting some deposits in there that are equal up to a lot of money, and they're not showing that particularly on their taxes, right?
Yeah.
So it's called stated income. There's on the prime side, using a net average, a 2-year net average, and we have the ability to gross it up. But yeah, on the alternative side, we don't even need to see your taxes.
Yeah, and what lenders? I know not a lot of the banks
Right.
have this ability, and that's why they kind of look at you cross-eyed and side-faced, like you're
Right.
not for us, and they kind of
You don't fit in your lending guidelines. You don't fit in that box at the bank. See you later.
yeah.
The amount of times I've had clients say to me, like, I walked into my bank, they pretty much laughed at me and said, good luck.
Yeah.
So,
So, guys, self-individuals, it's not the end of the world.
no.
You have lots of options.
More than just a regular employed client.
Yeah. What alternative financing options are existing for these guys? There's credit unions, B lenders, and when you talk B lenders, alternative
monoline,
lenders,
yeah.
monolines, and they just there's it's not like an office they can walk into. You have to go through a broker like
Generally,
yourself.
you have to go through a broker.
Yeah.
Yeah.
I've seen an uptick in private mortgages
Huge.
in the last couple of years since COVID.
Yeah.
Are you seeing the same?
I am, which is scary.
Yeah.
I'll be completely honest. Some of the stuff that I'm seeing come across my desk this year, private mortgages, there's nothing wrong with them. They are a great solution for certain needs. It's easy money to obtain, which can put people in real hot water real quick, if not obtained for the right reasons. Having an exit strategy on your private mortgages is, if you are working with anybody and they are talking about a private mortgage, if they are not discussing an exit strategy with you, you should exit that conversation because private mortgages are fantastic. When you are put into the proper private mortgage for the proper reasons, they are not a long-term solution.
Usually about 1 year.
1 year, maybe 2. Short-term solution, stepping stone to get you into the next part of your financing.
Maybe because you've had bruised credit.
Bruised credit. Maybe your income really isn't enough through bank statements to qualify. Right now, second mortgages privately are huge for debt consolidation. Yeah. Private mortgages are a fantastic product when used correctly.
I'm just seeing more and more private lenders coming up in this space because it just seems more profitable for them. And there's more and more people outsourcing it.
Yes.
Do you think that's going to continue if, with the rates, or even if the rates start to come down, you still see
I do,
that?
because qualifying for mortgages in this country is incredibly hard.
Oh, with the stress test, it's brutal.
Right.
Yeah, it's really tough. Bank of Canada, it's coming out next week.
Tomorrow.
Or, sorry, tomorrow.
Yeah.
June the 5th.
Yeah.
Moving forward, do you think that they're going to get down to where we saw prices pre-COVID? Or is that gone?
Or prices? House prices?
I would talk interest rate.
Interest rates?
Are we going to see those rates again, you think?
During COVID? No. Yeah. Pre-COVID? I think eventually when things settle, we will be pre-COVID rates. Which, I mean, if you think back, which feels like so long ago, we were in a little bit more of a stable market. Like, it wasn't a horrible market pre-COVID, right? I mean, it was busy, but interest rates were, the high 3s, mid 4s. Things were okay.
If you take a look at even 20 years ago, these rates, if you compare it back to like 20 years, they're not high.
Right.
It's just people see it high because we got spoiled.
Exactly. People think, seeing 2% interest rates now, like, that's the norm. That is not the normal. Not at all.
The norm is like 4 or 5.
Right. And I have people call me, I need the same interest rate I currently have. So you're never going to see that again. And if you do, the world's ending.
Yeah. That's
right.
Yeah.
2% is not normal. Even today's rates, like, we're high 4s for your insured mortgages, into the 5s. Realistically, when somebody comes at me with a rate and they're like panicking, that's so high. Let's look at your car loan. What are you paying on that? Because I'll tell you right now, I'm car shopping. And for somebody who flips out of cars as much as I do, the interest rates on cars right now are stopping me dead in my tracks.
What are they, 9%?
Oh my God. Well, depending on where you go, your new cars, you can get a somewhat decent rate on them now. The cars that I'm looking at, okay, fine, I can go get close to 2% interest rate on it. The prices of cars are through the roof. Mm-hmm. I called the dealership the other day. He's like, you don't want that. You're going to pay the luxury tax on it. I completely forgot about the luxury tax. So I'm like, okay. He's like, buy used. Buy a year or 2 used. Okay, perfect. Gives me the rate, 7.99%. I said, are you insane? And you talk to anybody who sells cars. Cars aren't really staying on the lot. They haven't been.
Well, I talk about this in a chapter in my book where we talk, is it worth buying new or used? Because you do lose in the first 3 years about 35% of the value of a car.
Yeah.
Right? The moment you drive it off the lot,
it loses.
Yep. Right? Again, you got to go back and do the math.
Right.
Right? Can I get a 3-year-old car with pretty much the same options with low mileage, and I can buy it at a 35% discount, pay the 7% or the 8% versus 4 or 5?
Right.
What am I looking at for a payment? Because my payment's going to be based on the sale price.
Right.
I could buy an $80,000 car. I can buy that car that's going to cost me $50,000. Again, it goes back to doing the math.
Right.
If you still get some warranty, I mean, the only thing that I bought recently new was an Escalade, just because every year I trade up on those. But it's a write-off for me.
Right.
And I believe in picking up a 2 or 3-year-old car. I don't want to buy something where the moment I drive it off the lot, I just lost 15% of the value because I drove it down the street and I go, you know what, it doesn't drive the way I wanted it to, and I'm going to bring it back. Sorry.
Not worth it anymore.
I know you just paid $200,000, but we're prepared to give you $170,000 now. What?
Yeah. But when it comes to interest rates and their mortgages, I look at what people are paying in car loans.
Yeah.
Nobody seems to really bat an eye at the car loan. It's just, that's the car I want. I don't care what it costs me. I'm taking it. Let's look at credit cards. Mm-hmm. How many of you are carrying, high balances on your credit cards at 19.99%? Heck, let's drop it down to 14.99% if you're lucky. Are you batting an eye at that? But God forbid we have 5% on a mortgage. It's the end of the world.
And they're totally totally prepared to pay 19% and finance their vacation on it.
Right.
And then take months to pay it off.
Exactly.
They're okay with doing that. We talked about the rates in the pandemic. A lot of people, I had my busiest years.
Yeah, a lot of people.
During the pandemic, because people are saying, hey, John, I want to refinance and I'm going to take some equity out and I want to buy this rental property, investment property. So I had people that saying, I want to be in a variable mortgage. I'm going to get you one below prime. Prime back then was 245.
245.
Right?
That 145 was a real sweet number on paperwork when it came to mortgages.
Yes. A lot of people said, hey, you know what? I don't believe in the variable. I want to be in a fixed. And they got locked in a fixed at 1.9. What are going to happen to those people? What do you think the outlook is going to be in the next year or 2 years when those 5-year fixed are going to come due?
Renewal.
What is that sticker shock going to be like?
It's not nice. I mean, you look at your variable rate clients and I mean, you can go on social media and see the people that are in the fixed rates and they're calling out the variable rate people. It's like a war online. You see the fixed rate clients and you see the variable rate clients, and the fixed are calling the variable stupid. Why'd you take it? Blah, 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 blah. Meanwhile, yes, as much as it has sucked the last 2 years for those variable rate clients, they've climbed, they've made their payments, their sticker shock is over. They've seen their increases. The fixed rate clients now that are coming up for renewal, going from that 1.89, 179 to 5%, it's a shock. Mm-hmm. It's worrying a lot of people, and the media is not helping that, right? The media is saying Canadians are going to start losing their houses left, right, and center. It doesn't matter where you look. It's like the world is ending. It's not as bad, even though your interest rate is doubling or heck, tripling. Your payment is not doubling or tripling. Yes, your payment is going to go up. One thing that I tell people is you can always look at re-amortizing your mortgage for the short term. If the new payment is hurting you financially, you more than likely have options. You know, maybe you're down to a 20-year amortization. You might have the option of extending it out to 30 years. I say that to some people and they're like, 30 years? Are you insane? Listen, take a 30-year to fit your payment, your lifestyle, your budget right now. You don't have to stay there. Do what fits you comfortably right now, like your budget, your lifestyle. Take a payment that works for you. Yeah. When you come into extra money or, you know, your pay increases or interest rates drop, you can then fluctuate with your amortization there, bring it back down.
I think Canadians are a little bit different than Americans.
Very much so.
They will make the payment where I find, you know, the people south of us, they will more tend to just drop the keys off and walk away.
Right. Yeah, Canadians are resilient in that. I mean, there's definitely foreclosures across the board, but
it's not the kind of numbers you see down the States.
Right. Canadians make their payments. And if you, I mean, I think about it when I bought my first house. It was back then for me, I was young and was just starting out with family and, you know, expenses. And there was always the mortgage payment was always number one. If you were going to default on anything, it was never the mortgage. Yeah. Right? Canadians tend to have that, make sure your mortgage is paid.
The forego that latte.
Right. I can't speak about that. I've got an addiction to that.
For listeners who are considering a career in the mortgage industry, what advice would you offer based on your journey and the lessons that you've learned along the way?
It is a rewarding career. I can give you that, but it's not an easy one. If you look at over the last few years, the amount of people who jumped into this business simply because it was easy, right? Mortgages were falling into your lap, paychecks were being cut. It was great. You look at those agents that jumped into the business at that time, where are they today? They're not here, right? They haven't had to work for business. And this is not a job or a career where just business falls into your lap. You have to work. You have to work your database. You have to network. You have to be out there. So it's a rewarding career. It's not an easy one. It requires work. It requires dedication. It requires long nights, early mornings. It requires evenings, weekends.
Working during soccer games.
Yeah.
Vacations.
Nonstop. Yeah. It doesn't turn off. But I mean, it's a great one. My suggestion is if you are wanting to get into it, you need to find a brokerage that supports you realistically.
And I find our brokerage, Rock Capital, Dwight is excellent at making sure we have the support and the educational.
Yeah, Dwight is great. It's funny enough, when I joined Rock Capital, Mortgage Center had recommended, I was leaving another brokerage and I was going to leave Mortgage Center altogether. And the president called me and he's like, where are you going? And I said, I'm leaving Mortgage Center. He's like, no, you're not. I said, yes, I am. And he's like, no. Call this office. He gave me Dwight's name and I'm like, I've heard about this crotchety old man. I don't know if I want to work for him. And he's like, no, honestly. And so I called and dealt with Laura, who is not Dwight at all. Complete opposite. Lovely. I was like, oh, this is amazing. And I've come to learn that Dwight Trafford and myself, I am the female version of him. He's that crotchety old man. I'm actually very, very thankful for Dwight in that team at Rock Capital.
I got hooked up with Dwight because I was golfing with him at the Devil's Pulpit. I was a member there. And I approached him and I said, I need a mortgage. I said, I just sold my home in Caledon. I bought something in Woodbridge. Can you give me a mortgage? He said, sure. So I went through all the paperwork and got approved. And I said, hey, how do I get paid on this? And he says, well, go get licensed. I said, how hard is it? He said, well, you just got to read a book. And I said, that's fine. So at that time, I used to have my home down in Sarasota, and I spent my winters. So from end of December till March, I would be down at my home. And so I bought the book, sat by the pool, smoked a cigar each day, read the book for a month, took a flight home, wrote it, got it. I said, I'm licensed. He
Now
goes,
what?
he goes, do your own mortgage.
Right.
So I redid my own mortgage and I got paid on it.
Yeah.
And that is where my career started in 2012.
Yeah.
And it's been great. Like I'm not out there like you,
Right.
where you're really active on social media. I'm active on social media, talking a little bit about the mortgage side, but mostly I'm
different things.
I'm advising for wealth management. But it has been a very rewarding side hustle for me. During the pandemic, I think I was busier on the mortgage side than I was on my wealth management side. I was pushing out $35-40 million a year, which is ridiculous as a side hustle, but I was extremely busy. But that's during the pandemic. It's been very rewarding, and I've got all my referrals, and I got my agents, and they call me because they know I'm good at it.
Right.
What advice would you give your younger self if you could go back on anything?
Well, I would have never sold my first home. Never would I have ever sold that house.
Put it for rent?
I would have totally turned it into a rental.
Yeah.
Right? So that would be one thing. Honestly, I don't think I would change much. I am young. As much as some days I feel like I'm 60. I am quite young. I started my life young. I had my first daughter when I was 20. And I missed out on a lot of my, your 20s as a 20-year-old because by the time I was 23, I had 3 kids. I had my daughter at 20 and the twins at 23. People are like, I don't know how you did it. I am super grateful that my life went that way because I don't believe I'd be where I am today if it wasn't for that.
Good. And now, you could be that really cool mom.
Right.
Right?
Right.
That you can hang out with your daughter. You're not too old to hang out with her and do things. Well,
that's just it. Like the kids now, my daughter's 13.
Yeah.
She's like looking at the ages of her friends' moms and me, and she's like, you're so young. I'm like, listen, I don't want you to go down the same road I did. Mind you, nobody wants their daughter to have a kid at 20 years old. But I'm glad I did because, yes, I am, as much as that cool mom, my career wouldn't be where it is today if it wasn't for that. Like, I had to grow up, and I had to grow up quick, and I had to get my shit together, right?
Yep.
I moved back in, my ex and I moved back into my parents' house when I got pregnant, and my dad said, you can live here rent-free, save for a house, get the hell out. That's exactly what we did. Saved, lived at home for a year and a bit, saved, bought our first house. I'm seeing friends now just trying to break into the market.
It's tough.
They're not. Unless they're having co-signers, right?
Or help from their parents.
Right. So I am incredibly thankful for, my young start. But I wouldn't be where I am today. My career wouldn't be where I am. Housing, I wouldn't be where I am. Yeah, so I wouldn't change much of that. I would have taken college a little bit more seriously if I turned back time. I went to college and had a bit of a fun party year and then dropped out. But yeah, there's not really much. My biggest regret is selling my first home.
If you would share one thing with our listeners that would have the most impact, what would that be?
Mortgage related?
Anything. Life.
Right now, I find Canadians, one of the biggest thing that I'm getting is when people call me, it's almost like they're ashamed of where they're sitting financially. They're embarrassed, right? Don't be. Doesn't matter who you're working with when it comes to, I'm going to keep this mortgage related, when you're working with a mortgage broker, whoever you're working with, mortgage agent, bank, broker, don't be embarrassed to make that phone call. There's probably help out there for you, and you are not alone, especially today. I think back in the day, you used to think of like private lending and alternative lenders, and it was almost like you're with a private lender or an alternative lender. Today, it's the norm. Don't be embarrassed of that kind of stuff. We're all sitting in the same country. We're all dealing with the inflation. We're all dealing with the interest rates. Pick up the phone and call somebody. It's my biggest piece of advice. I find that people are weary to pick up that phone call, like that phone, and make that first call because they're embarrassed. Yeah. And there's really no reason to be.
Yeah. How can people find you? I know you're very active on social media. Tell our listeners where they can find you.
You can pick up the phone and call me. But I am on TikTok, which who would have ever thought that had the power it does? TikTok, Instagram, simple phone call.
What's your name on TikTok?
It's Mortgages with Power on Instagram and TikTok. TikTok, there's probably about 50 pages of people trying to impersonate me. It drives me nuts. So it's the one I've got 60,000 followers or 50,000 followers on that app. But honestly, just pick up the phone and call me.
What's that number?
416-997-6895.
Fantastic. Well, that's all for today. Guys, if you like this episode, please subscribe and share it with others that you think you can benefit from it. And guys, guess what? My book is finally out. It is in stores. It's on Amazon.ca. It's on Amazon.com, Barnes & Noble, Chapters, Indigo, Wealth Without Wall Street, Taking Back Control of Your Money in a Rigged Financial System. Go grab it. You're not going to learn this information in a school. Samantha, thank you so much for being on the show and for sharing your insights into mortgage. That's all for today. Take care of your wealth and your health.